It's October 1929. You wake up in New York City. The streets are already busy. People are dressed well, confident, relaxed. You open the newspaper. Another record high in the stock market. Again, your friend made more money this month than last year. Your neighbor is talking about early retirement. Your barber is giving stock tips. You check your account. It's up. Again. You don't feel nervous. You don't feel reckless. You feel smart. You feel safe. You feel rich. And almost no one thinks what's coming next. To understand the crash, don't start with the fall. Start with the feeling. America felt unstoppable. Electricity was spreading fast. Cities were brighter. Homes were modernizing. Cars were everywhere. No longer a luxury. A normal part of life. Radios connected millions of people at once. Factories were producing more than ever before. Wages were rising for many workers. Companies were growing fast. This wasn't hype. It was real progress. So when stocks kept rising, people didn't think it was dangerous. They thought it was logical. They saw proof. Proof that the future was getting better. Proof that the system worked. And year after year, the market kept going up. This wasn't just rich people gambling. Regular people were investing. Teachers, factory workers, office clerks, farmers. The stock market felt open to everyone. Newspapers printed stock prices every day. Brokerage offices appeared in small towns. You didn't need connections. You didn't need wealth. And most importantly, you didn't even need the money. Because most people weren't paying full price. Here's where things changed. This is where confidence turned into fuel. You could buy stocks on margin. That means borrowing most of the money. A $100 stock? You paid $10. The rest was borrowed. If the stock went up, you made money fast. Very fast. If it went up again, even better. And as long as prices kept rising, debt didn't matter. You could always sell later. You could always pay back the loan. There was no problem. So debt stopped feeling dangerous. It felt invisible. Why worry about a loan when tomorrow's price would cover it? It felt normal. Routine. Almost boring. Here's the psychological trap. When prices rise for years, risk disappears. Not because it's gone, but because no one sees it anymore. People looked backward and saw confirmation. Every drop had recovered. Every panic had passed. The lesson seemed obvious. Stocks always come back. So every warning sounded outdated. Experts said this was a new era. Bankers were calm. Economists reassured the public. Technology had changed everything. One famous economist even said stocks had reached a permanently high plateau. That mattered. Because when experts sound confident, doubt feels foolish. Selling felt like quitting early. Staying invested felt responsible. Now add one more thing, social pressure. Everyone around you was making money. Your coworkers talked about stocks. Your neighbors bragged about gains. If you sold, you didn't just lose money. You looked wrong. So people stayed in, even when they felt uneasy. Confidence wasn't just emotional. It was social. In early October, cracks started to show. A few sharp drops. Some nervous headlines. But then the market bounced back. Again, that was the most dangerous part. Because rebounds teach a lesson. See? It's fine. By the final week, many investors were fully leveraged. Fully borrowed. Fully committed. They had to believe prices would rise. Selling wasn't an option. The crash didn't start with panic. It started with structure. Too much debt. Too much leverage. Too much confidence built on borrowed money. When prices stopped rising, the system broke. Margin calls forced selling. Selling pushed prices down. Prices falling caused more selling. Fear came last. Every bubble looks like this. Not crazy people. Not obvious greed. Just normal people responding to incentives. Doing what made sense at the time. That's why bubbles are hardest to see from the inside. The most dangerous moment in finance isn't when people are scared. It's when everything feels safe. Because right before the fall, everyone feels rich.